Imagine this. A startup launched in 2017 skyrockets to fame, amassing over $400 million in venture capital funding, and then makes a grand debut on the New York Stock Exchange with a whopping $2.5 billion valuation. But here's the twist. Within just 1 year, this same company sees a jaw-dropping 96% plunge in its market cap. And today, the entire company is worth merely 1/3 of what the founder's lavish Miami home is currently worth. This is the shocking rise and fall of the once beloved scooter rental company known as Bird. It's been said by those residing in major cities that you could literally not walk 10 feet without either tripping over a parked Bird or clipped by a rider while zooming down the sidewalk. Travis van der Zanden. He founded Bird in 2017 and over the next several years raised over $400 million in VC funding. From those funding rounds, Bird's private valuation peaked at $2.5 billion. At that level, Travis's equity on paper was worth over $400 million. Bird ultimately went public via SPAC in November of 2021 at a valuation of $2.5 billion. Just 1 year later, the company's value had plunged 96% to a market cap less than $90 million. Now it's estimated that Travis personally cashed about $100 million off the table during Bird's many funding rounds. Only 1 year after Travis stepped down as CEO, the company was delisted from the New York Stock Exchange after failing to maintain a market cap above $15 million. And by December of 2023, Bird's market cap was valued at $7 million. And just 1 year earlier, Travis had paid $22 million for a mansion in Miami, Florida. In other words, the entire company of Bird is now worth just 1/3 of what Travis's home is worth. After graduating from the University of Wisconsin, Travis van der Zanden landed a job as a product manager at Qualcomm in the year 2002. Travis then received his MBA from the USC Marshall School of Business. In 2009, he became the Chief Revenue Officer for an enterprise chat service known as Yammer. He remained at Yammer until the year 2011 when he left to help co-create an on-demand car wash service named Cherry. He served as the CEO of Cherry through 2013, at which point the company was acquired by the rideshare organization known as Lyft. Travis joined Lyft and became the company's chief operating officer. However, he departed only 1 year later to accept a job from the largest known competitor, Uber. Travis joined Uber as the Vice President of International Growth, and as a result of his departure from Lyft and acceptance to Uber, Lyft filed a lawsuit against Travis alleging he broke an employment confidentiality agreement. Ultimately, the lawsuit was settled on undisclosed terms, and Travis ended up exiting Uber in 2016. Travis's experience in tech startups in the transportation sector played a crucial role in his journey to establish Bird. His tenure at these companies provided him with deep insights into the emerging market of shared transportation services. His keen observation of market trends helped him to recognize the growing demand for eco-friendly and efficient metro transportation. Electric scooters seemed like a perfect solution with the culture's rising interest in micro-mobility solutions within urban environments. Ultimately, his vision led him to create a convenient, affordable, and environmentally friendly transportation option, an option that could both reduce traffic and pollution in major cities. In September of 2017, the company launched its services with electric scooters that users could rent through a mobile app, paying per minute of usage. Rapidly, the scooters began appearing around Santa Monica and other parts of Los Angeles, a known hotspot for traffic, congestion, and high-density living. As the availability of scooters became prevalent and popular, they created enormous controversy. Bird did not seek permission or permits before expanding into a new city. The scooters were also becoming a noticeable safety hazard. Even though riders were instructed not to ride on sidewalks, they almost exclusively rode on sidewalks, periodically colliding with pedestrians. And when the riders did ride in the street, they often disobeyed traffic laws, stop signs, and other essential safety measures, leading to a number of reported accidents. By 2019, the company had expanded into 120 cities around the globe. It's at this point Bird experienced a number of competitors that also jumped into the space, which seemed to be handing out free venture capital funding. Bird's valuation rose fast. VC firms loved the the idea and raced to pull out their checkbooks. In February of 2018, Bird raised $15 million in Series A financing. Just a month later, they raised $100 million in Series B. By May of 2018, just a few months later, they raised $150 million in Series C, primarily from Sequoia Capital. It was at this round that the company reached a $1 billion valuation for the first time. Bird is the fastest company in history so far to reach unicorn status. And by June of 2018, Bird raised an additional $300 million at a $2 billion valuation. After several additional funding rounds, Bird eventually reached a private valuation of $2.8 billion. In total, the company raised well over $400 million in venture capital. During the later rounds, it was assumed that Travis's personal equity stake in Bird had been reduced to around 20%. Now, assuming Travis managed to maintain ownership of 20% of his company, his paper net worth prior to taxes at the $2 billion valuation would equate to a $450 million equity stake. Travis reportedly personally cashed out around $44 million in Bird's mid-2018 funding rounds. In total, Bird raised around $415 million in half a dozen private rounds. It has been estimated that the company's founder, Travis van der Zanden, personally took home around $100 million of that $415 million, perhaps even as much as $200 million. Even after these private sales, Travis still owned an estimated 20% of Bird's stock. And at a $2.8 billion valuation, he had an estimated net worth of $560 million. Of course, with all of this venture capital money flowing around, Travis had to enjoy his new lifestyle jump, and he certainly did enjoy this newfound wealth. Travis paid $8 million in cash for a newly constructed mansion in Santa Monica, California in November of 2018. He decided to sell this same home less than a year later for $9 million. In August of 2020, Travis paid $21.7 million for a mansion in Bel Air, which had belonged to the late-night host and comedian Trevor Noah. 6 months later, Travis decided he didn't want this mansion anymore, so he listed it on the market for $25 million. After no bites, he was forced to lower the price to just under $20 million at $19.9 in October of 2022, and as of today, it currently remains on the market. In November of 2021, Travis decided to take his talents to Miami with the purchase of a $22 million mansion in the town of Coral Gables, just south of Miami. In total, Travis owns an estimated around $40 million worth of real estate. The very same month of his Miami purchase, Bird went public via SPAC at a price of $8 per share, giving the company a market cap of $2.5 billion. At the time of IPO, Travis owned an estimated 13% of Bird, and his stake was worth a pretty penny, roughly $325 million, money in the bank, new mansions, at the top of Silicon Valley, every venture capital firm wanting a piece of the action. Everything was going excellent for Travis until everything began to fall apart. 1 year after going public, Bird's stock price had dropped from a 52-week high of $11.25 to 34 cents per share. The company's market cap fell from $2.5 billion to just $70 million. At this 52-week low, Travis's 13% stake in the company was worth only $9 million. But stay with me. In just one short year later, November of 2022, do you want to guess how much a single share of Bird, ticker BRDS, would cost? Remember, just 1 year ago in that date, a single share would have costed you $8. But a year later, the share price was just 24 cents. But it gets so much worse. Fast forward another year to September of 2023, and Bird gets delisted from the New York Stock Exchange. This happens as a result of companies failing to maintain a market cap above a certain threshold. In this case, Bird failed to maintain their market cap above $15 million. As of today, Bird's market cap is a measly $7 million. Keep in mind that Travis owns a $22 million mansion in Miami. That means the entire company of Bird is worth a little less than a third of this Miami home. In the event he still owns 13% of Bird's total equity, that stake is worth about $900,000, down several hundred million from just not that long ago. The meteoric rise to insane valuations came at one of the most riveting bull markets of the 21st century. Venture capital companies were handing out free money in an effort to have a piece of the next big thing. While many people were out there gambling their stimulus checks on 0 day till expiration on out-of-the-money options on GameStop stock, venture capital firms were hungry for the next big market to buy a piece of the action in. Travis van der Zanden's venture with Bird showcases a powerful mix of seasoned industry knowledge, keen market foresight, and creative innovation, which paved the way for a pioneering and impulsive venture in in the fast-changing world of urban transport. As attractive as the idea may have seemed on paper, this sector quickly turned into a battleground of intense competition and saturation, leading to a dwindling market share and vanishing profits for the company. In turn, this eradicated its hopeful growth forecasts, and its stock price plummeted as a result. At times, what appears to be an exhilarating and promising business opportunity may not deliver the anticipated outcomes. This serves as a reminder that even the most enticing markets can be unpredictable, and success in such arenas is not always guaranteed.